Welcome to another installment of Between Two Earnings Calls. Today, we're going to discuss the November 2025 job market update. This is our, I guess, fourth or fifth one of these that we've done, and we hope that you get a lot of value from them. So let's get into the data. So we're going to start with the dashboard. And again, statistically speaking, we're expecting to see between 11 and 15 number one IR job opportunities in a month. And we hit 27. It was a great month for opportunity. Now, from the interviews and calls range, we're typically expecting 1 to 2 a month. We got 1, so we're in the yellow. And then a conversion rate is somewhere between 10 and 20%. We're not converting. The conversion still remains an issue for us. So let's get to the next slide. When you look at the performance trends, number one month in the past 3 years, 27 jobs. It blows every month out of the water for the last 3 years. Key details, lots of compelling opportunities. There were several repeat posts from the summer that were posted in November. And then there were a lot of confidential or no company identified. So those are kind of tough. So the 27 may be a lower number. Now, when you look at this from a year-over-year growth rate perspective, this is really interesting. Going into the month, we were expecting the year to be flat to 11% positive in terms of number of opportunities. Based on November performance, we're actually tracking to about a 14 to 23% growth rate for the year, depending on how December falls. And I think we're tracking to the midpoint there because we're well ahead of the low end of what our expectation is for December, since we're midway through December. So market structure, again, we think there's a shift towards large mega caps from small micro, which means it's a more particular job market. And so there's no margin for error. Red flags get magnified, and then minor overlooked items can lead to an auto rejection. Applicant overload is really the problem on the recruiter side. There's just too many people applying for too few roles. Now let's look at artificial intelligence trends. And the things I want to call out here are from what I've done to analyze why I didn't get a call or get through the ATS at a given job. And there's some things here that are really interesting. And it starts with this idea of a location mismatch. You may be applying for a remote job or a hybrid job, but if you're saying you're in Chicago and it's hybrid New York, you may get auto rejected. A title, if you don't have the title of the job you're applying for on your resume somewhere, most likely in your summary statement, you may get auto rejected. Formatting, you got to remove lingering spaces, make sure that you're using the right bullet points. It may look right to you, but it may be wrong to the ATS system. I find the vertical bar is your friend. And then the worst one is this future year idea that if you're, my job ended October of 25, but the logic problem with an ATS system may say that, hey, we're not in 26 yet. So if they have 25 as your end date, you're auto rejected. Recruiter trends, again, don't take things personally. It's not a me issue. This is very much an overwhelming market to executive recruiters and all recruiters. Too many people applying for too few jobs. And companies continue to go direct. So we don't know how real these roles are, given they're trying to go direct for very nuanced, sophisticated job searches. And the other thing we're seeing is there's a timeline that's lengthening. We're not necessarily getting a call back within the first couple of days. It may take a week or 2 weeks to get to an HR person. So what are the key learnings? Too many people unemployed, too many people applying for a limited number of roles. Companies are expecting perfect candidates, otherwise you're rejected. They're literally waiting for the exact perfect fit. And the market right now is rewarding someone who's currently in a seat for a targeted role, is at a direct competitor, and is already in the industry. So companies are really limiting their search to a handful of people when they're looking to fill these roles. So let's get into the actual trends. We've added these are year-over-year growth rates by month going back to January of 24. And what you can see is 24 was mostly a strong year in terms of opportunity, given how weak 23 was. We saw some great growth into December. And then you look at 25, my gosh, you can see how tariffs really impacted the pace in terms of opportunities on a year-over-year basis between March and August, which was really February and August, which was the sweet spot for the tariff impacts. It really messed with the market on all job levels. Then you look at the number one market, we're seeing sort of a significant growth jump at the end of the year in 24 and 25. We're seeing, and again, you can see the impact of tariffs in that February and really on this one, March through August timeframe. Tariffs really impacted the market throughout most of 25. Now let's look at the mix. And what you can see on this is that we think the market has really shifted more towards that large mega cap at the bottom of the chart, but you're seeing some a little bit of improvement from that small and micro. And really, the mid cap is what's getting pinched. And the mid cap is what you want to see as the largest part of this IR job market. So from 23 to 25, we've applied to 677 IR jobs. That's almost 12% of publicly traded companies have turned over their IR role in the last 3 years. That should mean healthy opportunity for most people. Now, when we look at total IR jobs, we saw 38, I should say November, apologies, saw 192% growth, 660% growth, 2-year stack. We're seeing strength, we're seeing opportunity out there. It's just the follow through isn't happening. So you look at this, November again marked a record, 38 jobs in November. The last peaks were in July of 25, August of 24 at 33. And even October was 33. So we're accelerating. Now you look at November for number one opportunities, 27. This was a huge amount of growth, 286% year over year, 440 on a 2-year stack. We're seeing a new record for number one IR job opportunities in November. Again, you look at this, steady chart for most of the 3 years, and we're seeing an acceleration here into the end of the year. Now, December is probably not going to lap November. We're not sure if December will even hit the average, but we're seeing a strong end to 2025. So let's look at conversion. Again, conversion is the struggle here. Our conversion rates dropped to about 3.7%. We're tracking to about 5% for the back half of the year. It's a really tough conversion rate, and that's where we're not seeing the follow through. You can see it here, 3.7% conversion in November. We're more than 2 standard deviations below the mean. Conversions, again, only had 1 in each of the last 2 months. When we had zeros, it's a lot because of tariffs or political turmoil. Again, here's just the month by month conversion rate. And then days to rejection. What we're seeing is workday is about 20 days to a rejection and non-workday is about 30. On balance, when I look at the data, I feel like it takes longer to get rejected applying through a non-workday platform. These are some of the key companies that we're looking: Kraken, StubHub, OpenAI, Greenbrier, Synchrony, FedEx, Toro, McKesson, Hub International, 3D Systems, Trex. Some really good opportunities are out there, but again, the follow through is what's really hard. And so in the appendix, again, 2F25, we're down to about 5% conversion, tracking well below when the market was healthy in that 2018 to 2020 timeframe, and even post-COVID in 23 and 24. Where we're at, 677 companies, based on our recalculation, is about 29% of the New York Stock Exchange and 19% of NASDAQ listed companies. Always here to connect, always here to help you in your job search. I hope this data helps those who are looking for roles in investor relations. If you know people who could use my skills, please reach out and get us connected. Thanks for watching.